big hedge funds, those big speculators, they're short corn, but they've been covering that short position. Real time, they're probably short 95,000 contracts. That's at the very top there. And then they're probably long about 10,000 soybeans, and we'll get into where this market's headed here over the next few months. And they've been reducing their positions in canola, and of course, they maintain their long positions in livestock. Anybody a livestock producer in the room? If you're a cattle producer, it's been a really nice bull run for the last 5 years. And I think the hog guys are getting lucky because the USDA, I never thought I'd live to hear this, but the USDA finally said that there's a bird problem in the United States. They typically don't do that. So the funds really since 2022, when inflation peaked and inflation started coming down, funds have been selling the ag commodities. And during the winter trade shows, you guys have probably seen me speak. And 2 years ago, I was joking with the farmer. I said, this is just getting too hard. You can't compete. It's not your grandfather's market anymore, your father's market. These guys are using algorithms and all that fun stuff. And I said, you know what? It's time to just leave, sell the farm. Ride it into the sunset. Take your money and run. And I said, maybe you should invest in Bitcoin or NVIDIA, the AI chip company. And of course, if you did that, you would have more than doubled your money very, very quickly. So that's what the funds are chasing. They're chasing the Bitcoins of the world. They're chasing AI stocks, but they don't have an appetite for ag commodities. It's been very wet in the United States over the last 3 months, unlike Eastern Ontario or Quebec. Do you remember everybody was talking about the 89-year drought cycle? And who's the guy that introduced you to the 89-year drought cycle? I did in 2019. We even had Peter Johnson do a demo at one of our final events to tell you how to maintain moisture in your soil. Not tilling the ground, but more towards that no-till and irrigation and all that fun stuff. And they were all wrong. I mean, bless their hearts, these weather guys, it's a tough gig, right, to get it right. But that 89-year drought cycle could still impact farmers as you go over into 2026 or 27. Maybe it's delayed, and unfortunately that drought hit Canada and Ontario in some parts, and it just got too wet, to be honest with you, and it's caused a lot of disease issues. So the USDA in August came out with a 188 plus 53.6 on the beans, and Pro Farmer came in lower. Why? Because Chip Floor, and I don't know if you guys know Missy Bauer. I've had her B&M Consulting from Michigan. I've had her speak the odd time for the tour. She calls me the Chip Flory of Ontario. I don't know if Chip Flory would agree with that, but I know Chip, and I've followed the Farmer Crop Tour for many years. He's usually not concerned about a lot. And this year, southern rust and tar spot is an issue. It's in every county in Iowa. Those that follow diseases over the last 25 years, this is the worst they've seen. If you go into a cornfield, the guy will walk out just covered in southern rust. So we may have shaved the top end, and I think that's what they're doing, is they're massaging the yield lower to take into account that disease. I'm afraid that in the September 12th crop report, which is coming up, that's when the USDA looks at their individual plot data fields. Will they see big yields, or will they see enough disease to start to lower that yield? So the market thinks that the 188 was the high mark, and from here on in we could go lower. I think it's still going to be a record, probably 183, 185 by the final January number. And I'll tell you why, if any, impact on balance sheets and prices. I don't know if you guys caught this about a few weeks ago. Trump on his social truth network made a post. I don't know why it's called social truth, but I think he's give him a chance. He's trying. Trust in Trump, right? That's the new slogan in the United States. Anyways, he said, Z, please buy 4 times more of U.S. soybeans. Help my U.S. farmers. Well, you can't buy 4 times more of old crop, 24, 25, because they don't have enough to do that. They could buy 4 times the new crop, but so far they bought 0. But there is 40% of the new crop, 25, 26 marketing year, that is been bought by unknown. In the past, unknown was China. But all of a sudden, unknown, I don't know who unknown is. It's very confusing. Maybe it's a backdoor through South Korea, who knows? So, I'm going to try to connect the dots for you, give you some good news. So maybe you have gotten the rains, maybe you didn't. Maybe it's an average crop for you this year. But I'll tell you why I think prices could head higher, particularly for soybeans. And Trump extended the tariff pause with China for 90 days. That puts you right around November, mid-November, okay? So stay with me here. And then he decided, hey, so NVIDIA was selling some AI chips to China called the H20. And then around the end of the first quarter, Trump over-abuses his power and says, you can't do that. And CEO of NVIDIA goes, what do you mean? I've been selling chips to China for 2 years. You don't have an export license. Okay. So if you look at the last 8 trade deals that Trump's done, it's not to do with politics, it's to do with money. Every trade deal has invested in the United States. Show him the money. So, critics came out and said, do you really want to lose the AI chip race to China? Because you want, if you want to build these data centers, you want to build them with AI stack American, not Huawei chips. And by the way, those Huawei chips can't compete with the Blackwell AI chip from NVIDIA. Nonetheless, he was concerned about national security. So the CEO of NVIDIA went, look, what do you want? He goes, pay the US government 20% of your revenue. They were generating about $9 billion a quarter. He goes, no, I'll give you 15, but you're gonna have to allow me to sell a dumbed down or watered down version of my Blackwell chip to China. He says, done deal. So I think you're gonna start to see NVIDIA sell chips to China by the end of the fourth quarter. And so I think when he posted that comment on Social Truth Network, you got to read between the lines. Hey Z, I gave you your AI chip, now do something for me. Buy some US soybeans. So you and I are going to wake up one morning, I'm hoping, you're going to see a USDA flash sale that says China bought 2 million metric tons of beans. Now, China can buy US beans, they're 20% cheaper than Brazil. So why aren't they buying? It's politics. Okay? And Z, you're not going to get a trade deal until Z and Trump meet. They're supposed to meet at the APEC Summit in South Korea on November 14th and 15th. And by the way, the other day, there was a headline news that said China was going to buy 500 Boeing airplanes. If you go back to April, China was canceling every Boeing airplane ever made because of the trade war. So if you start to connect the dots, I'm hoping by mid-November, by the time you're done harvesting beans, we go to 12 bucks with a $3 basis, 15. It's not bad. The high this year so far has been about 14, 15, if you cut some of the highs in futures and basis. Let me go back here. Any questions so far? You guys with me? I could be wrong, okay? So don't shoot the messenger here, okay? This stuff is hard at best. But I'm trying to predict the future for you. Most people won't stick their necks out, I will. So, let's hope I'm right. US dollar index, it's probably bottomed for now. The Fed is looking to cut rates. Trump is trying to control the Fed. He's trying to fire one of the Fed members because he's just upset with Powell because he just will not. He wants interest rates at 0 or 1% or something like that. So, if you do, and there's a 92% chance they're going to cut in September 17th. So that should provide some support to the US dollar. I think we're past the worst case scenario, worrying about tariffs. I mean, the world has been selling US dollar, US assets called de-dollarization for many years now because their lack of confidence in the policy, the trade policy, and so on and so forth. So if you've bottomed in the US dollar, that means you've topped in the Canadian dollar, which would be good news for your basis long term. So you can see there's a head and shoulders top formation on the daily chart. So looking like it probably wants to break that and trade lower. The low was around 69 at the peak when we started this whole trade war. And then there's WTI crude oil. You can see the double top there. We were booking diesel in May at 88 cents at the lows. OPEC's been releasing some of their production cuts from 2 years ago. There's a voluntary cut of 1.6 million they're thinking about also releasing. And so once you get past the summer driving season, which is about now, I think those supplies are going to overwhelm demand, and you're going to see this coming back down. So one of your inputs you can probably get cheaper. The magic number in Ontario is between 90 cents and $1. And then you got your fertilizer. It's expensive, it's elevated, the global balance sheet's tight. The two largest exporters, China and Russia, need to export more. So you need Trump to fix the Chinese trade deal. You need Trump to have a peace deal with Russia. You need Trump to do a trade deal with Russia to release some of those fertilizer supplies. Otherwise, the balance sheet is just too tight. The only one that's cheap is potash. Why? Because we make it here and we got lots of supply. Otherwise, the other fertilizer prices are above the last 2 years and the 5-year average. I think if you're patient, you're going to get a reset this fall because you're going to lose acres in corn next year, and that demand is going to start to come down. I think not necessarily you guys, but in the U.S., the farmer can't make money, whether he grows wheat, corn, or beans. I mean, in North Dakota, you got beans below $9. This basis is as high as $1.50 or more. Why? Because this time of the year, those beans go to on the rails, go to the PNW to be shipped to China, but China's not buying. And so there's a very big basis. So if you want to manage risk on the fertilizer side, you could maybe do the potash, but I'd be patient. I don't want to pay these prices. And the number of bushels of corn to pay for 1 ton of fertilizer broke to new record highs above 2008. Here's your U.S. corn balance sheet. A lot of numbers on here. The USDA increased demand by 500 million. That's your biggest risk with the corn balance sheet into 25-26. It's not yield. If you look at the top there, highlighted, you got a 188.8 versus a 185 and a 183. And even if I drop the yield to 183, and I don't adjust demand, ending stocks are still below 2 billion. Okay. Last year we bottomed at the end of August at 385. So far we haven't hit that low, but we had about 50% of bushels in the bin still to be sold because everybody did a basis contract and kept rolling 3 or 4 times, and I think finally they puked on that September basis contract. And there's a lot of farmers in the U.S. have to make that decision today. First day notice tomorrow for September futures. So are they going to puke it? They probably could, but there's only 10 or 15% versus 50% last year. So I think there's some fun month-end selling going on. But corn was up 3 today. So, I think the worst is behind us. We could still hit another low, because seasonally the low can be October 1. But the last few years, it's been sooner than October 1. So I think we're bottoming. I think the bleeding has slowed down. As I said, the funds are starting to buy this. Why? Because you've got potentially lower production because of disease, and you got really strong demand. And I'll show you that demand here in a quick sec. Here's the soybean balance sheet. 53.6 was a 53.6 from the USDA is a record. I think we could come in lower. The finish is not good, guys. It's very dry, especially in the eastern corn belt. We're getting a little bit of that. Obviously, we got some rain here today, but I think it's taken the top end off the bean. We'll have to wait and see. Well, just to go back to that for a second, if you lower the yield, you can really lower that ending stocks number, but the key is China. If China does not come in, and by the way, China's bought enough through December, so you're kind of missing that U.S. export window. They don't start to buy. If Trump does not give you a gift, like the USDA did in January last year, exports are too high by 300 million. All of a sudden, that ending stocks number at 290 grows to 500-600. What do you think we're gonna? I've been talking bearish numbers on beans for some time because of the stray war, and I thought we could go back to $8. We haven't done it yet. It's been quite resilient. That's your risk. okay? So you're hoping for something from Trump. You're hoping that he can come through for you. Again, the risk with soybeans is China has bought zero, and then that export number is too high. The pace for 25-26 is the second worst in 10 years. And here's your December corn chart. So it tested, if you notice, I don't know if I can show you. If you look at this, right around here, so we tested the 417, which is a ceiling, a short-term ceiling. Once you test that, it's normal for the market to correct lower. And if you don't feed this bull, it could go to new lows. You could actually, the next level would be 372.5. So this thing's not over. You need to break that 417 to get to 433. Then you need to break the 200 to get up to almost 493 or $5. If you get back to that 493, $5, not till next year. I doubt you're going to get there anytime soon. Okay? But am I a seller here? No. Why? Because you're trading well below the mean, the average, which is this red line, this 200-day. So see when it went up there in February, March, when USDA gave you that gift? That was your selling opportunity. Now, did you have to sell all of it? No, but you have to sell something. Take advantage of it when it's above that 200-day. When it's below the 200, ignore it. You're giving it away. Here's soybean meal. You can see the downward trend here. As I connect my dots, I draw these two red lines. You can see that it starts up there selling. The fund starts selling. They hit the lower end of the range, then they stop. They take their profit. They send it back up, make more money. They make money coming down and down. Then they stop, take their profits. They go back up, take their profit. And eventually they'll resume the downtrend. With the new biofuel mandate for 2026 in the US, you're going to have an excess supply of meal. And so, short term, not surprised it went to that 290, but it will resume the downtrend longer term. And so you're going to get cheaper meal, probably down to 250 for those livestock producers. And then the September soy oil future is the exact opposite. It's the spread between the meal and soy oil. Because of that mandate, you can see the new bull market that we've created. We've probably gone too far, too fast to the upside. You can see well above the 200. And once it trades the lower end of that range at the far left corner, it will resume the uptrend over time. Right now, those plants can't make money because it's a 2026 story. So they'll try to slow down those plants. But as you get into 26, that production capacity should increase. And they're trying to offset the lack of exports. You're trying to find a new U.S. domestic source for that, for all those beans that they're producing. This is a soybean daily futures chart. You can see the support at 985, the ceiling at 1076. You need to break above this 1060, 1070 for any chance at 11. If you get that USDA daily announcement that China bought some beans, I think the funds will take this to $11. Remember, the funds are trend traders. They're not necessarily looking at those fundamentals. They're looking at these technicals. And I think if you can get that Chinese trade deal by mid-November, you're $12. Okay? So am I worried that we're going back to $9.85 or $8? There's some risk there, but I think the risk is flipping. The pendulum is flipping to the upside, not downside. And then there's November canola. Stats Canada came out with some production numbers, a little bit lower than estimates, a little bit lower than AAFC last month. But what's driving this, and I still think the numbers are too high because there's a drought in Canada, and the only thing that saved the crops in Western Canada is the lack of heat. You guys had too much heat. But I still think it's below average. We'll have to wait and see as time goes on. But this is also being impacted by the tariffs from China on canola. Scott Moe from, I think it was Saskatchewan, we're supposed to go visit Z this week. But he's a premier, he's not Kearney, so I don't know. We need somebody at the federal level to fix that. So we'll see what happens there. And there's your Chicago wheat. That's a long-term chart. That's your $5 support. If it breaks $5, it's going to $4.50. Peter, do we still have to plant that poverty grass? What do you think? Peter sold his at 11 bucks. He's good. So there's still some risk. I'm hoping if the U.S. spring wheat harvest gets completed here, it's about 50% complete. Last year we had a post-harvest rally of 70 cents. So unless you guys sold it for that $8 magic number, this is tough. Why? There's a ton of cheap global supplies, plus China's missing in action. They haven't been buying. Again, Trump's gonna have to come to the rescue. And when you have ending stocks at 900 million, wheat never goes anywhere. Chicago wheat focuses on that big supply and tends to just continue to go lower. Will a peace deal with Ukraine, Russia help wheat? No, because you're going to introduce more production, more competition. So don't expect that to help. You need to lose acres. You need to lose a minimum 200 million in production next year in the US. So the farmer needs to move away from, well, they have been over the last 50 years, but you're going to need to see a little bit more of that. So otherwise, it's tough. You're lucky that corn is not the anchor right now, because corn could be the anchor with 16.7 billion bushels. But that demand is so strong that it's helping. Look at the demand in Ontario for corn. It's just off the charts. I was saying that on July 1st, we're running out of corn, and keep those plate bushels in the bin, 20, 30%, 24, 25. Maybe you might get $8 by mid-September, Woodstock. I've played this game 8, 9 times out of 10, and it does work. Not all the time. Basis in Quebec is 274 over. I think they're paying every day, all day long, 762. I think it might go to $8. Eastern Ontario, Quebec is short corn. The province is going to be short corn. I'm not going to give you the number just yet, because Henry's going to come up and tell you all that. But honestly, we've got a smaller crop coming. You guys were spoiled for the last 5 years. It's about time the yield came up. I'm just kidding. Advantage farmer. The processor is going to have a difficult time making money. Their margins are going to get squeezed. They're going to have to import corn. That basis could cost them. So that's old crop. Chatham Kent High getting up to 2+, and I said that maybe that basis might get to 3 in the feed market. But the wheat market in Ontario has been a pretty good crop. It's pretty big, good quality. It's probably going to prevent us from seeing 8, but we'll see. It could still happen. There's your corn demand, more than twice last year, that red line. And then this is your demand in the US, up 58% so far this year. And it's early. It's off the charts, guys. So there's, China's not buying, but there's a lot of other countries, particularly Mexico, but other countries that are coming to the rescue, and they're buying corn. It's cheap. The $4 corn is cheap. Whoops. There's soybean basis. Going forward, if you can get that Canadian dollar to come in lower, that could help your basis. But soybean basis has come off a little bit because of that higher dollar. And then there's your wheat basis there. August was dry, not ideal for soybeans in the United States. This map is comparing those brown spots are compared to the last 133 years. So the ranking is 125 out of 133. It's been a tough finish for a lot of areas. Temperatures, not extremely high, but relatively high compared to history. Whoops, what did I do? Whoops. And then this is just another look of the lack of precip in the month of August. It's been dry in the eastern corn belt. And then this is your 30-day outlook. I don't see a lot of rain on that chart. They could be wrong. Again, these are the weather guys. Mother Nature's going to dictate what's going to happen. That's it, folks. That's my presentation. So, to summarize, before I go, store your wheat, but if you don't have storage, don't pay that commercial elevator storage. Do a basis contract. A buck over is not bad, it's not great, but you know, you've seen it a little bit higher, but you know, it's not a -1. Do it off December, hope for a post-auction rally, get paid 60% cash flow up front, pay some bills, and hope for some sort of rally above this $5. On beans, I'd wait for that Trump trade deal mid-November. You can call me on that if you want. Checks in the mail, right? And then on the corn, I would store it. If you have storage, I'd store it. If you don't have storage, again, do a basis contract. It's not worth paying. The interest cost is still high, even though rates have come off. So I just do a basis off December, hope for a rally. Funds are starting to bite. You still got to feed that bull. So we'll see what the USDA says on December 12th. But I think that disease in the U.S. has shaved the top end. And you hope that demand continues to remain strong as you go into 2026. Remember, we're going to lose acres next year, so that should help overall the price outlook. But I don't, you know, you guys got to adjust your expectations. This is not 22. You're not going to see, you know, $6, $7, $8 corn. Maybe top end is 5. Remember, when you're above that 200-day moving average, what are you going to do? Sell something.